Okay, guys, thank you everybody for jumping on this webinar. My name's Sabinda. I'm head of growth here at Brickflow. I think most of you probably know about our business, but just for those that don't, we are a digital marketplace for specialist property finance, and using us is the quickest and easiest way to source and apply for loans across bridging, development and commercial products. As part of what we do, we are very focused on creating a central ecosystem across the specialist property finance space, and in that look for opportunities to collaborate with different businesses. One of those businesses is who you're going to hear from today, which is CapEx Associates, and we align for kind of two key reasons. So the first is that we're all about adding value to the customer, and CapEx do exactly that. And the second one is also helping you grow your revenue stream. And James is going to talk through how that happens as well. So I'm going to pass over to James now, who will kick off and tell you a little bit more.
Thank you, Sab, and good morning, everyone. And thank you to Brickflow for inviting me onto this seminar to give you a bit of an insight into, pretty much who we are and what we do. Basically, I'll go through in terms of explaining who CapEx is, just a brief overview there. What are embedded capital allowances, why they're often missed, what qualifies for embedded capital allowance tax relief, who can claim, how does the relief work, the benefits of embedded capital allowance tax relief, our process as well, and how, of course, to position this with your clients. But as Seb has said, it's all about adding value, which is that's at the core of what we do. And hopefully that will come across in a very simplistic way for you today. But I'll start by just telling you about CapEx Associates. We're based in Solihull, just outside of Birmingham, so that's where my accent comes from. I've never been able to shed that, unfortunately, but there we go. But we specialise in uncovering hidden tax relief opportunities that standard accounting practices miss. And interestingly, most of this business actually comes to us from accountants, because accountants are very, very good at identifying allowance expenditure which qualifies, but we specialise in the hidden aspects, the integral features of commercial property to good effect. So we work very cap in hand with accountants, which again adds value to them, but also we work very, very well with companies like Brickflow and commercial property agents and so on and so forth. So what are embedded capital allowances? So embedded capital allowances, they represent a valuable but very often overlooked tax relief, enabling commercial property owners to reclaim thousands of pounds in tax savings on qualifying fixtures hidden within their buildings. And these can be assets such as lighting, heating and ventilation, and other integral features.
James, could we just jump in there and cover off, when you talk about kind of commercial assets as a whole, is there anything that you'd think doesn't qualify that may be surprising, or anything that people need to be aware of when they're putting in this application in terms of the asset that's actually sitting behind it?
Yeah, it's a good question. I mean, basically, there's quite a bit that would not qualify. Land doesn't qualify. Goodwill, non-integral structural elements such as walls, floors, and ceilings don't qualify either.
Okay, great. And in terms of looking back at kind of the work that you've done previously, is there a particular commercial asset class that perhaps you see the biggest savings for? Perhaps is it retail, is it warehouse? Just so people can kind of keep an eye out for those opportunities in particular, or is it all generally quite consistent across the commercial space?
No, that's another good question, actually, because as we know, commercial properties vary greatly in terms of what they are and their purpose as well. But in answer to your question there, most certainly the commercial properties such as hotels, care homes as well. That's a big one. Hospitality venues. The reason why is because what you typically find, for example, in hotels and care homes, are lots and lots of integral features such as ventilation, lifts, lots of kitchen space in terms of worktops, fixed HVACs, lots of bedroom space in hotels. There's an awful lot that is in there rather than, and I'm not decrying industrial units at all because we're very successful there. But when you get a hotel as opposed to an industrial unit, which an industrial unit, even though it could be a big space, is quite sparse. Hotels, care homes, hospitality venues, they contain naturally lots and lots of integral features which can be claimed for to really, really good effect.
Okay, that's really useful. And in terms of looking at ownership and the borrower sitting behind the asset, is there any difference between somebody that's perhaps bought a commercial property for investment purposes versus if they're an owner-occupier? Do those two different buckets of people still qualify for the same relief, or is there anything that one group should be aware of over another?
No, I mean, there's, again, with the two elements there, owner occupiers most certainly can claim for capital allowances. With investment, we do have an awful lot of clients who own commercial property, but they rent it out to another entity, another business, and thus receive rent from them. So there's no reason why you cannot claim embedded capital allowances for that if you are not an owner occupier, if it is an investment. The only reason you couldn't claim was if you are a developer and you develop a property and hold it as stock, you can't claim embedded allowances because the allowances are there for a business which is an ongoing concern. But the developer can most certainly refer us over to someone who is buying that development, that commercial development, to use for commercial purposes, if that makes sense.
Yeah, no, that's really, really clear. Could we talk a little bit about why these allowances are often missed, or perhaps why people don't really know too much about them?
Yeah, but I mean, basically, a lot of these allowances are missed because most accountants focus on visible assets. Now, accountants are extremely well versed in apportioning expenditure in the accounts under standard accounting practices. But what we find is that there's a lot of integral features which are pretty much hidden in a commercial property that an accountant can't legitimately claim for in the accounts. Let me explain. When you buy a commercial property, you usually buy three elements. Usually, you buy the land, you buy bricks and mortar, and you also inherit what's within that property. And it's that integral feature, the third element, which usually goes unclaimed on an acquisition. And that could be the hidden elements, like when you get a plenin ceiling, the suspended ceilings, and there's lots of cabling in there. That usually goes unclaimed upon acquisition. There's lots of heating systems which go unclaimed as well. There's an awful lot of hidden expenditure which is not itemised on an invoice on acquisition, which an accountant can't claim for. So what we do is we employ an in-house tax team to work within HMRC guidelines to establish through a survey exactly what's in that property. We can then apportion that through HMRC guidelines in terms of what can qualify. So in essence, we add massive value to an accountant's client in this respect, because the accountant's done a great job in claiming allowances on office furniture, for example, and visible, very obvious items. Whereas we've added that value in terms of going over and above what an accountant can usually claim for. So that's why it's missed essentially.
And who's responsible for filling out that survey or declaring what's within? Because as you've just rightly identified, accountants will probably look at very surface level items. Who you know, and you mentioned a survey that helps kind of dig deeper into it. Who fills that out? How do people know what to look for? What's the guidance so that you know, you make sure that all bases are actually covered?
Yeah, great question. So we would be responsible for the survey. So we would come out typically to a client's premises, and we have an in-house tax team who would go out and survey and take photos of all integral features. We have floor plans. You obviously almost all the time commercial property owners have plans of integral features on that property and gross internal floor areas. So we carry out the survey, and we carry out the survey within guidelines set out by HMRC in terms of what to look for on integral features. So it's not the client's responsibility to do any work at all in that respect. They leave it to us so they can go on running their business. And we, as inobtrusively as possible, of course, carry out the survey to establish what they can claim for over and above what's already been claimed.
Okay, cool, makes sense. And just for the benefits of the brokers listening in, so we've talked about the relationship between the accountant, the owner or developer, and yourselves. How historically has the broker fit into that process, and where should they kind of, you know, flag that perhaps their customer should come over to speak to you?
So yeah, again, another very good question. So with the broker, the broker doing the job that they do very, very well would basically establish, well, it's this sounds very simple, but you'd establish, yes, I've got a client who owns a commercial property, and they've not developed it and they're not selling it on in that respect. But it's very simple in terms of if you own a commercial property and you are a UK taxpayer, then it's worth talking to us. And I know that sounds simple, but that really is the crux of it, because we would establish whether or not there is a claim, because a client, with the greatest of respect, or a broker would not know if these claims have been made previously. You would not know that at all. That's something that we would ask, and we call it a free health check. So the broker would just very simply go, look, there is someone who we feel could help or add value. It's worth a 5-minute call. You own a commercial property. We know that, obviously. It's worth putting you over to James or to James's team to see whether or not you can qualify for additional tax relief. It's worth a chat. The worst case scenario would be is that it's all been claimed, you can't benefit, but at least you know you're not missing out. Or the best case scenario would be is that they can establish that you are entitled to significant tax relief. Then they can show you a way and how that is facilitated and realised, if that makes sense.
Great. And also, just for context, what's the largest kind of cost saving you've ever helped structure? So where you've perhaps uncovered a big opportunity to save for the client. Have you got an example that you can share?
Yes, we do have an example. The largest one that I've ever been involved in. We actually saved the client just shy of £1 million in tax relief over several years. The one that I looked at, and it was only a few months ago, was a case where we saved the client £500,000 in tax relief. That came about, and that was through a care home, and it's a significant care home, I will say. And we established on acquisition that the previous owner had never made a claim. So the previous owner missed out significantly there, unbeknownst to them, of course. And so we saved the client £500,000 in tax relief. And that client came to us from one of our introducers. And that introducer, of course, earned an introducer's fee.
And Could you just talk to the structure that you have or the agreements that you have with your introducers so the audience can understand, in addition to adding that value to the customer, what else they can perhaps benefit from in terms of kind of additional revenue streams as well through partnering with yourselves?
Yes, of course. Yeah. I mean, as you say, you touched on the most important thing is the adding value to the broker's clients, because what we see there is that the broker's client would very much enjoy receiving those benefits. But I think it's important to note that that broker's client is going to be very loyal to that broker because the broker had the foresight to get that client over to us to see if we can add more value, even if we can't help. It's really good that the broker has done that in the first place, which creates good relationship building. The fee structure. What we do is that we would pay an introducer 10% of our fee upon successful completion and payment of our invoice. To give you an example on this case that I spoke of just recently, where we saved £500,000, the our fee, which is still going through, so it's not completed just yet. There is a lot of work to do. Our fee of 5% of allowances identified is 141,500. So it's on the top end of our fee structure, but it's all relative because our fee percentage stays the same. But our fee is 141,500. The introducer, once this goes through, will receive just over £14,000 as an introducer fee.
Okay, perfect. That's really helpful. Thank you. And we've just had a question come through on the chat. So somebody's asking, we've got Martin here asking about when you're talking about commercial property, will that include, for example, a heavily adapted HMO that's then later been refinanced onto a commercial with a commercial valuation and a yield basis? Does that scenario fit?
Yes, it does. Yeah, most certainly. HMOs are classed as commercial property. So HMOs most certainly do qualify. The HMOs, because there are certain elements of houses with multiple occupation which don't qualify, they tend to be on the lower end of benefits because with HMOs we can only include, and this is specific to you, Martin, we can only include communal areas of consideration. So with houses of multiple occupation, we can't include any fixtures or features within bedrooms. We can only include it on communal areas such as hallways, which of course in hallways, unless you keep lots of clutter or anything like that, hallways are very, very clear, with perhaps not an awful lot of integral features on display or hidden. So in answer to your question, Martin, yes, HMOs most certainly are considered under embedded capital allowances.
Perfect. Thank you for answering that. And actually following on quite nicely is just a clarity as to why this relief is only available on commercial properties and whether there is actually any equivalent for residential.
Yeah, I mean, the embedded capital allowance is exclusive for commercial properties. To give you, and not to bore anyone, I don't wish to do that ever, but to give you some insight in terms of why it came to be. Embedded capital allowances were established just after World War II. This was to promote businesses to conduct business on the high streets, to be visible, and to also create jobs as well. So residential, of course, does not fit under that tax regime. It was all added to increase gross domestic product. And what we see is that the more people who invest in commercial property, the more business is done. Hopefully, the more profitable and healthy business grows. And with business growth comes job creation. It all fits very, very nicely in growth overall for the UK and the economy itself. So embedded capital allowances are exclusively for commercial properties.
Okay, perfect. And we've got another couple of questions coming through on the chat. One from David, which is great, which is about if no allowances have previously been claimed, how many years can this be backdated by?
That's an excellent question, David. Now, there are a number of answers. So, with an acquisition, okay, if you acquire a property and no claims have been made, you have 2 years to claim those allowances, or the owner, the buyer, has 2 years to claim those allowances, and that is done through a Section 198 form. That's an election form that the vendor would it enables the vendor to pass over the entitlement of allowances to the buyer. You have 2 years to claim. However, if you purchase a commercial property from, let's say, an entity within a SIP, a SAS, a pension fund, or a government owned property or a council owned property, because pension funds, government owned buildings, and council owned buildings have never had the entitlement to claim embedded capital allowances, you can claim capital allowances on that property, and the time of acquisition is irrelevant, if that makes sense. And if I can add as well, the reason why you can't claim embedded allowances if it's government or council owned is because they don't have that entitlement because of their position in government and in local council. And in a pension fund, you can't claim this tax relief because you're already receiving the maximum level of tax relief. What if a property is owned in a pension fund? And this relates to tax liability going forward. So, in answer to your question, David, you can claim allowances within 2 years of acquiring a commercial property, or it's unlimited if it's acquired from one of those three entities that I've just mentioned. Hopefully that's clear.
Perfect. That makes sense. And I know you mentioned previously that in terms of the process to making a claim, one of the things is that a survey is done. Is this survey publicly available? So actually, if somebody wanted to now backdate in the time that you have mentioned, that they can perhaps use something to cross-reference as to whether it would be or wouldn't be worth making the saving, or is it always easiest to just come directly to you?
Yeah, excellent question. You come directly to us. It's not publicly available. The survey and the report is conducted and carried out by ourselves under HMRC guidelines. However, the report and survey is submitted to the client's accountant to incorporate on the client's tax return and computations. So it's best to come through ourselves. We always liaise very, very closely with the client's accountants. We're never against them. We're always with them, being guided by them if necessary. But yes, you come to us first and foremost for us to conduct due diligence as to whether or not it's viable, and then we go through the accounting process, through the gateway, or the accountant does as a tax officer.
Brilliant. Okay, thank you. That's really clear. Just moving on slightly to the next topic, and also relates to another question around who specifically can claim. And David's asked another great question, which is if the property is owned by a pension scheme, do the same rules apply? And also, I think in general, it'd be useful to just talk to about any other ownership structures that may or may not be impacted by certain rules from your kind of experience.
Sure. Pension scheme as well, yeah. So pension scheme, we can't, if it's owned in a pension scheme, we can't affect embedded capital allowance claims because it's already efficient in tax. And with that particular structure with pensions or SAP or anything which is aforementioned, we can't unfortunately help. Typically, we help limited companies. So commercial property is owned in a limited company. We can help if it's owned in a partnership. We can help if it's owned in an LLP. We can help if it's owned in an individual's name as well. One thing to look out for, even though embedded allowances are available for loss-making companies, okay, you will only benefit, or a client will only benefit if they are making a profit or if they are taxpayers as individuals and they're, for example, receiving rent from a commercial property that they've rented out to a business, and that business pays them rent and they're making profit from that.
Mhm.
Hopefully that's answered the question there, David.
I think that has answered the question, but if there are any further follow-ups, please feel free to drop them in the chat. We've also had another question come in from Paul, which I think the answer is yes, but I will leave it to you as the expert to answer it. He says, I have a scenario where a client has undertaken a major refit and spend on a commercial investment property, which they have retained and are renting out. Could they qualify potentially for capital allowances on the relevant part of the spend?
And this was Paul. Was that a question from Paul?
Paul, yes, yeah.
Paul, that's another excellent question, Paul, and I'm happy to say yes, yes, absolutely. I think I've not been massively clear on the second element in terms of what you can claim for, and thank you, Paul, for alerting me that indirectly, nonetheless. But refurbishments, absolutely, you can claim. It's all, we talk all about acquiring a commercial property, but with most commercial properties, there's a lot of refurbishments that are carried out, albeit for improving or the aesthetics of the property, for whatever reason that may be. With refurbishments, and they've held on to the property and are renting it out, for example, and they're receiving rent, you can claim a large proportion of refurbishment costs. And Paul, whilst the accountant will do an extremely good job in apportioning expenditure, let's say, for example, under repair or maintenance, there's only a certain amount of a refurbishment cost that can be apportioned legitimately under normal accounting practices. Sometimes with refurbishments, there's a main contractor who would do everything, for example, and it's a big bill. Let's say it's £500,000 of refurbishment bill. An accountant would find it extremely difficult to be able to claim for all of that under maintenance and repair, because really it's an unrealistic figure. And also, more poignantly, if it's with a main contractor, for example, there may not be sufficient itemized invoices which the accountant can tick off and make sure they're legitimately claiming under normal accounting practices. That is very, very much where we come in. We would look at what the accountant hasn't claimed, and we would apportion that again legitimately through and conducting surveys, through guidelines, to make sure that this claim is absolutely maximised over and above what the accountant would have already claimed for. So the answer, Paul, is absolutely yes. Refurbishments form a very big part of the added value service that we can give to commercial property owners who have undertaken refurbishment.
Perfect. Thank you for answering that. And to your point that perhaps there might be a main contractor in place who doesn't produce kind of itemized invoices. Are there again any resources out there that can be used so that perhaps a developer or investor can guide their contractor to follow or think of certain points so that they're kind of getting ahead and doing a bit of itemization so that there's a bit of an understanding around what could possibly be claimed for beyond what you may unpick in the future? Are there any kind of guidance notes or anything, anywhere people can go to give that information to any main contractor creating invoices?
There's no guidance per se, no. It's subjective, it's not subjective as such, but it is difficult. If contractors and invoices, they're just so vastly different. There are cases where a contractor has now done absolutely every single nut and bolt which an accountant is able to claim through normal accounting purposes. Excellent, that's good. The reality is it doesn't happen often, and that's why we're in existence, to actually look after that in a legitimate format. But there's no real element, or there's no real guide to actually give on that, unfortunately, because invoicing is so different, it's so varied.
Mhm.
But the good news is that if there is that situation where an accountant, and they don't avoid, accountants don't avoid anything. They just, if they can't legitimately put a claim within their accounting procedures, it's left alone. And I think that's the sticking point for many people once they get their head around this, is that there's so much unclaimed in there or out there that it's almost sacrilege. But if we can facilitate that, and if we get introductions from brokers and the like to help people to identify this, and for us to add that and to get that money from HMRC into the client's rightful pocket, because they've spent a lot of money on improving their business to improve profits, to job create, then everyone's a winner as far as I'm concerned.
Okay, brilliant. Thank you. We've had another question come in from Martin, which is, would you be able to claim these allowances in Scotland, Wales, and Northern Ireland as well?
Martin, I'm pleased to say yes, you can.
Perfect. And is the process exactly the same, or are there any differences to be aware of?
No, the processes are the same. There are a lot of tax regimes which differ regionally. When I say regionally, England, Ireland, Scotland, Wales. This is very uniform. It's very, very simple in that respect. So yes, you can claim as far afield as Northern Ireland and Scotland and Wales. Yeah.
Perfect, great, good to know. And we've talked a lot about process, how this works. We've talked about the benefits to the customer. We talked about the benefits to the introducer as well. Could you talk to how perhaps, going away from this call, brokers or introducers could position this with their clients and how they should approach it to encourage them to, be aware and look for this opportunity?
Yeah, absolutely. You will require, with brokers who would be very kind enough to put business our way. I do understand, you would need a little more meat on the bone rather than just me talking at everyone here today. But to position this with clients, for me personally, and in my experience, where I've been an introducer, for various companies in my professional life, keeping it very, very simple is key. And I don't mean to patronise in any way, shape, or form, because I learn, and the only way I've learned is where I gave all information to a potential client. Let's say I was giving information on embedded capital allowances to one of my clients, and I wanted to pass it over to yourselves, with me giving loads and loads of information in terms of how it might benefit them, what the features are, rather than focusing on benefits, it's pretty much lost on potential prospects. So my advice to position is to, of course, your bread and butter as a broker, for example, is key, and that's the most important thing from your perspective. But to throw it in terms of, right, well, we've looked after that, it may be worth you having a chat with James at CapEx, because you own a commercial property, or you're buying a commercial property, or you've refurbished a commercial property. There may be additional tax relief that you're entitled to. It's worth a free 10-minute health check with James to see if you are. If you are, brilliant. If you're not, then at least you know you're not missing out. Let me introduce you to James. I'll email you. I'll copy James in. Good luck with the introduction. I hope something comes from it. And if it doesn't, at least you know you're not missing out. That, in its simplest form, is what I've experienced to be the most effective way of introducing. One more way, which we could look into, is what I call turning paper into digital. So if any brokers, I'm just throwing this out there, but if any brokers have a digital form to engage a client for the broker services, we could add a feature at the bottom saying, would you like to be introduced to CapEx to discuss additional commercial property tax relief? Tick the box if you're interested, leave it alone if you're not. That's an even simpler method, which we're looking at with other introducers. perhaps that's something we can discuss further. But those are the two areas, the two simplest forms of introduction. Because my aim with all introducers to me and my team is that the introducer does the smallest amount of work to earn a fee from us, but more importantly, to keep their relationship with their client very, very strong and to get that added value message to them. So a simple form of introduction would, in my experience, be the most effective way.
Perfect, thank you. And then we have a final question, which I think rounds it all off very nicely, which is another question from Paul. How do we make direct contact with you, and what is the cost of an initial assessment for the client?
Yes, some very good questions here, Paul. The first of all, can you ask that bit at the end as well? Was it the initial cost for the assessment? Was
Yeah,
that?
yeah, exactly.
Okay, right. Paul, there's no initial cost for an assessment. There's no upfront cost. This is on a 100% success basis. Let me explain that a little more. So, should we get introduced to one of your clients, Paul, for example, we go through the process of identifying allowances. We find, for whatever reason, there is no allowance identified. It could be a number of reasons, we don't know. But we go back to the client and say, we're really sorry, but it seems as though everything's been claimed or you don't qualify. We end it there. We don't charge anything unless a report is finalised, the client signed the contract and is happy with everything, the accountant's happy, they're happy with the figures, they're happy with the fee structure. Only when a claim is submitted to HMRC do we even think about the invoice stage. So in answer to your question, there is no upfront cost whatsoever.
Great, thank you. And then Marcus has also followed up with another question, which works really well with just what you've said. Do you guarantee the advice? He said HMRC are notorious for retrospectively going back and changing their minds on what claims are allowed. So what's your take on that?
Yeah, again, it's a salient point, Marcus. We all know HMRC's stance on various tax schemes. Yes, we guarantee this in as much that this scheme, and hopefully I'll make sense here, this scheme is objective rather than subjective. There are many subjective schemes out there where HMRC's take on qualification differs to a client or differs to an agent like ourselves. This is very, very clear cut. Do you own a commercial property? Yes or no? If it's yes, that's great. You might be entitled to allowances. Have allowances all been claimed for all expenditure? Yes. That means we're not going to put a claim through. Or no, with the input from the accountant, there is rise for a claim here. So in this respect, this is the most clear-cut, clean tax planning mechanism product that is potentially out there at the moment. There's no subjectiveness. If you don't own a commercial property, you can't claim. If you haven't spent refurbishments at all on a property, but a claim has been made previously on the acquisition or from the person who bought the property off, you can't claim. So it's very clear cut. We've never had one come back. There's no reason for them to come back because we know either yes, you can claim or no, you can't. There's no subjective stance on these claims or on these claims at all. I do hope I've made sense there, Marcus.
Great, thank you, James. I think those are all the questions from me, and we have no more from the audience now. So are there any final comments you'd like to make before wrapping up?
No, I just thank you so much for inviting me onto this webinar. I do hope that the people who have attended here today, I hope you've got something from it. I hope at the very least it's given you a little bit, a snippet of more understanding of how we can add value to your potential clients and add value to yourselves. Hope maybe provide you with a very meaningful passive income stream but more importantly, facilitating an ever stronger client relationship that you already have with your clients through this added value mechanism. But no, I've just, any other questions that anybody has, then I'm delighted to answer them. And if I don't know the answer, I've got a team behind me who do. So nothing's out of bounds.
Great, thank you, James. And for the benefit of everybody listening, we'll send a follow-up note with James's contact details so you can speak to him directly. If you need anything from us, always feel free to reach out to any of the team as well. So we will leave it there. Thank you to everyone for joining, and hope you have a great rest of the day. Thank you, James, and thanks everyone for joining.
Thank you. Thanks very much indeed, Sab. Thank you.
Bye.
Bye. Bye-bye.